Retired investor Chuck Akre has one of the world's best investing track records. Akre's insights are useful for investors to assess stocks. In this video, we will explore how you can invest in compounding machines like Chuck Akre. Chuck founded Akre Capital Management in 1989, and today his firm has approximately $16 billion in assets under management. He coined the term compounding machines to describe businesses that are capable of compounding the shareholders' capital at high rates for long periods of time with little risk of permanent loss of capital. Chuck says, "I have this motto in life as well as in business, which is every day I'm lucky if I've learned something new, and I'm doubly lucky if it hasn't cost too much." Akre invested in Berkshire Hathaway in 1977, deeply influenced by Buffett's ideas on investing. Akre keeps a framed letter that Warren Buffett sent him on his office wall. Akre, for example, put a strong emphasis on finding the competitive advantage of the companies he invests in. You can learn more about competitive advantages in the video Understanding the 5 Company Moats. Chuck says, "We focus our capital in a select number of what we believe to be extraordinary businesses. These companies meet specific standards related to the business itself, and people who manage it, and the discipline they demonstrate when it comes to reinvesting free cash flow." Chuck refers to this investment approach as the three-legged stool. As an investor, you should buy great businesses with a quality management team which can reinvest a lot of their free cash flow in future growth. When you can find these companies, you've discovered a potential compounding machine. These are the companies that you are looking for as an investor. The three-legged stool concept focuses on 1. The business, 2. Management, and 3. Reinvestment. First and foremost, you want to invest in great businesses. You want to invest in great companies with a strong competitive advantage. When a company has a high and predictable return on equity and free cash flow, pricing power, and a strong balance sheet, this is already an indication that you are looking at a great company. When you have found a great business, you should look at the integrity of its management. Do they have skin in the game, or a new concept is soul in the game? Are the interests of you as a shareholder and management aligned? You want to invest in companies where management focuses on long-term value creation. The author of the acclaimed book Fooled by Randomness, Nassim Taleb, says, "Never ask anyone for their opinion, forecast, or recommendation. Just ask them what they have in their portfolio." So if you have found 2 legs of the three-legged stool with a great business with great management, you want the third part, which is a company that can reinvest a lot of its free cash flow to achieve future growth. These kinds of companies can grow their free cash flow per share exponentially. The return on incremental invested capital is a great metric to look at reinvestment opportunities. You can calculate this by dividing the change in the net operating profit in the current period by the change in invested capital in the previous period. In summary, in relation to the three-legged stool, in leg 1 you want a strong moat, that the company is easy to understand, that it has a strong balance sheet, that it has high predictable free cash flow and return on equity, and that it also has pricing power to protect from inflation. Within leg 2, we want a management team with exceptional skills, integrity and passion, and that they treat shareholders like partners, and that they are indifferent to Wall Street short-term focus, and that we want to make sure that management's compensation is rational, and that there is a corporate culture that fosters accountability and transparency. And within leg 3, we want a pattern of disciplined reinvestment and also extensive opportunities to reinvest free cash flow. When you have found a great business with great management and plenty of reinvestment opportunities, you have found a potential compounding machine. These companies are quite rare, as only a few companies in the whole world meet all 3 criteria. If you can buy a compounding machine at a fair price, you will end up with a great investment as a result. And as Warren Buffett has said, it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. There you have it, an investing masterclass with Chuck Akre on how to find compounding machines.